I think at the end of the day, specifically as a small business owners, you care about how much net cash left in your pocket at the end of the day. So how does Uncle Sam tax you based on your accounting record? So keeping a proper accounting record is essential to maintain your business and to keep Uncle Sam's letters away from your business.
So if you're wondering why you should be interested in all this, obviously if you're in business right now, you know how important all this stuff is. But when it boils down to it, like Aiko mentioned, you want to keep money in your pocket. So you want to make sure all this stuff is written down, recorded properly, and also communicated in a way that can best fit your needs, right? Hello everybody and welcome to another episode of New York 100. So if you're a business owner like myself, then usually you focus on the day-to-day. You focus on product production, marketing, management, admin, sales, right? But at some point in time, you get a new family member that comes into the building. They take off their hat, they shake your hand and say, hello, nice to meet you. My name is Uncle Sam, right? And at that point, everything changes, right? So whether planned or unplanned, you need an accountant, right? So today I brought to you someone with 16 years of experience to go through some of the pitfalls that small businesses have to very large multinationals have and help you guide you through scaling your business. So today I'm sitting with Aiko Chan from Aiko Chan PLLC. Nice to meet you again. Our second time meeting, right?
Right.
Yeah. And then, so I'm just going to go through your track record. Over 16 years of experience, you held 2 senior management positions.
Right.
And you use your tax expertise to provide efficient financial strategies for businesses and individuals, right? So, if you're new to the channel, then welcome. But if you're not new to the channel, I have 2 accounting interviews on this channel already. One is about why accounting is important. You can watch that. And the other is the future of accounting. But this video in particular, it's about scaling. When you grow, when you go from solo entrepreneur to you're hiring out your first people, or when you go from 1 office to 2 offices, when you go from one country to another country, how do you use accounting in that perspective? You know, how do you deal with taxes and all those different areas? So we're going to be talking to you about accounting and scaling your business. So I'm very excited about that. With that said, I'm going to say to you, I know it's a long intro, sorry about that. If you have a piece of paper, make sure you grab a piece of paper and a pen, because we're going to be doing a little note-taking section. And I need for you to follow along. So make sure you have a book, make sure you have a pen and paper. You can pause the video, get that. But you're going to be doing some note-taking section in a bit. But before we get to that, thank you for sitting through the intro. Thank you for coming here today, Aiko. Appreciate it. And would you mind just saying, like, how did you get into the accounting industry?
Sure. So I was born in China, as you can hear from my accent. My father used to be a dean of a school, and he had a dream that as an accountant, no matter how good or how bad the economy is, accountants are always be able to get a job. So he told me that, why don't you be an accountant? That's how I got it into this industry. After I came to US, I was thinking, what should I do? I told myself, if I want to get a decent job in US, first of all, I need a college degree. So I went to a college. After I got admitted, I was thinking, which major should I pick? At that time, I thought I should go with accounting because that's the cheapest and quickest way for me to graduate and then get a job to support myself. So I picked that up. and become an accountant in US.
So when did you? So first of all, what part of China? Just so we all know, what part of China?
Fujian.
Fujian. And then at what age did you come here to the States?
I came to US in the year of 2001.
Oh, so okay, around 20 years, or 19 years.
Right.
Brilliant. And then that was all right. So when you first got here, you went here for university.
Yes.
Okay, university, and then so college, and then until you started to study accounting. So I want to ask, like, why accounting? I know you said that you will always be able to get a job, which is a really good point. But was there anything else that kind of drew you to accounting? Was there anything else that you liked about it or you found fascinating?
At the beginning, actually, I was not very interested in accounting. Later on, after I got a job, I started being an auditor, and I went through some field jobs. I started seeing some investment.
Wow.
Yeah. All of a sudden, I feel that, accounting actually is interesting. And then later on, I started touching this tax area. I find out actually this is quite interesting because almost everybody needs some tax help.
You found embezzlement, and that's actually pretty interesting. Question: how did you find that out? When you look at the books, you can. Was it very obvious that they were doing it once you look at the accounting, or how did you find that out?
Oh, yeah, because I was an auditor.
Oh, okay.
We got in there. The reason I was an auditor was because New York State required all the young graduates to have 2 years of auditor experience in order for this person to be licensed as a CPA. So that's why I got to go through that step. During that step, I had a lot of fun being an auditor. I found something quite interesting. So, for example, some publicly traded companies, as soon as I was here doing this financial statement, I was telling myself, look, the stock price is going to decrease tomorrow, and the next day, I was sitting there watching together with my colleagues, watching the stock price goes up and down as we predicted yesterday.
Well, how were you able to predict that?
Oh, we can based on the financial statement result.
Wow, okay.
So it's quite interesting when you feel that, hey, you know the market as well.
That's actually, so you saw the stocks based on the financial metrics.
Right.
I'm very interested. What were some of the metrics that you were able to look at, which determined how the stock was going? Was it the assets, or what?
So, for example, if you know that what Wall Street analysts expectations was, and then you find out the financial statement actually kind of below their expectations, and you know the stock price is gonna drop.
Oh, okay. Gotcha. So what were some of the key things that in your 2 years of auditing, and you now have your business now that we're going to get to, but when you had your senior management positions, I want to know, what were some key things that you took from what were some key things that you took from your early careers in auditing that applied to your job? Let's start there. What were some things that you learned in your 2 years of doing the audits, young Aiko? What were some key things that you learned and applied for your job?
Sure. I actually was an auditor for 7 years.
Wow. Okay.
Not just 2 years.
Okay.
I learned how to see things in a whole picture. So nowadays, a lot of tax accountants can't read the financial statements. But I can see things in the whole picture. So for example, if any businesses do not go through audit step, or they do not know how to close their book. So as soon as I open the book, I will easily spot out which item doesn't make sense to me, and I will drill down to see more about that. So the auditor's experience tells me what the reasonableness is in a financial statement.
Okay, so you're able to see the whole picture. And then, so when you went to, now you had 7 years, then you went to your jobs, you had senior manager positions and whatnot. So, and now you're overseeing a lot more. What are some of the things that you're taking from your jobs that you're applying now as, with your own entity?
Client service.
Okay. Wow, this is really good. Okay.
Yeah, we're in the service industry. Always put clients first. You need to meet a client deadline. You always got to remember when this has to be delivered. You want to meet their expectations or better than their expectations.
So what about the deadlines part? Because deadlines, they sound really good. I always have deadlines as well with my clients. But sometimes it's either it's just unrealistic. I mean, I think there is such thing as unrealistic deadlines. Some people may not believe in that. I think there's some things that's unrealistic. Yeah. Or sometimes just things happen, you're not able to hit that. So how are you able to, because I deal with that problem as well. Not really a problem, but how are you able to hit those deadlines? What is your work regimen like? Because I know I asked you what are you doing this week, and you said I'm working. Like, how are you able to hit those deadlines?
Sure. There are two types of deadlines. One is outside the deadlines, like Uncle Sam's deadlines. There's no way to manage that, right? That's a hard deadline. The other one is the internal deadline. When I take the job, I make sure communicate with the client well when you need this. And I usually require 1 week to 2 weeks turnaround window, right?
Okay.
I will look at my own schedule to see whether I have any room to squeeze this in.
Okay.
If not, what is the alternative? Should I just introduce the client to somebody else in my industry who I think are reliable? Or I just tell the client that if you are willing to postpone another week, I will be able to do it.
What about if a client comes to you with demands that isn't like realistic? They want something that's above and beyond, but it's not really realistic. For example, if a client saying we want, actually I don't really know how to translate it in accounting, but so for example, like one client that came to me, tell me that, hey, I give you the information right now, but I want my tax return tomorrow, right? Under these kind of circumstances, I look at my schedule. If I am able to push other clients one day, you know what? In service industry, there's always express service fees. I like that. It's always express service fees. I really like that. But ultimately, you're about servicing the client, make sure that you're fitting their deadlines, because your industry, not making the deadlines can, have for very fatal consequences.
Right.
Right. So why did you decide to start your firm, Aiko Chan PLC? How did that come about?
Because I was working for a small CPA firm. And then one day, I love that accounting firm. And they used to have 8 partners there. And then one of them, I used to call him Professor. He taught me the first audit and the first tax returns. I respected him. So one day in the middle of March, as most of you know, March is accountant's busy season. So I received a phone call from him. And surprised me was he was out of job. Why? Because he has been serving that company for about 32 years, right before his retirement. For whatever reason, the company let him go. So after I received that phone call, I felt that was a big alarm to me. I was asking myself, in New York State, employment at will, my salary is going to go up and up, right? At any minute, my employer can go out on the streets, find a cheaper labor to replace me. At that time, what do I have to put on the table to feed my kids? So should I started thinking what I have to do in the next 5 years? So that's how I started thinking about starting my own practice. I did some market research, and then I find out if I start my own practice, my overhead is low. My experience is there. The clients know me. They know my service. Normally, if this client has no particular reason to ask a Big Four to sign on their tax returns, they will go with a more economic choice. Come with me to reduce their fees, accounting fees, and then get the same service.
Wow. So basically you saw that you weren't really stable at your job, and at any moment really you could have lost your job. So question, this doesn't plan or anything like that, but talk to me about stability, because a lot of people, we chase stability and being comfortable, but I have a question for you. Does stability really exist?
Relatively, right? When you are a cheaper labor, stability is there. You put your heads down, you work. All employers will love you. But when your salaries go up, the employer will ask, do you worth this salary? Why do I have to pay you this much? And their expectations to you will also increase. And will you be able to meet that expectations? And do you want to work your ass off just to exchange that salary?
So because as the salary increases, the job becomes more demanding, and it's less and less stable, because they're kind of praying for you to make a mistake so that they can remove you from it. Wow. So this is really interesting, because you've had your business for 2 years now, but you've also been in an experience where you've worked with, was it a multinational or?
Right.
So you worked with a multinational, and you worked with a multinational, and of course you service small business. So you've seen pretty much everything, every scale, every size of a business. You've actually personally been one or either worked with one. So I have I believe it's 4 stages of a business. I want to kind of go through that with you and see if you agree, right?
Sure.
So the first is the solopreneur. Someone is the hustler, working by themselves, maybe freelancing, and this is a solopreneur, right? And then someone graduates to a startup phase where they maybe have 3, 5, maybe 10 people around office, and it's still kind of a hustle and bustle culture, but it's still startup. And also then you have the small, medium-sized business. It can range from 20, 50 employees, a little more established. They might even have a few different locations within the country. And then there's the multinational, right? They're in different parts of the world. And this could expand further and further and further, but for the sake of this video and the concept that we're going to just keep it to these 4 layers. Do you agree that's a standard? All right. So this is the part where you need to take out your pen and paper, because we're going to get very granular here on some of these topics and some of these terminologies. So I want you to follow along with us. So this is the time for you to take out your notes, and we're going to go into this topic, right? So I want to dive into all 4 of these stages. And now you yourself, you might be in one of these stages, one of these categories. I want you to take note of that. And I want you to see how you can shift your thinking to get to that next stage, right? So, all right. With that in mind, there are 4, well, there's actually 3 statements in accounting, but we're gonna make 4. Okay. And I just want your definitions on all 4 of these statements, and we're going to be referring to the statements quite readily throughout the interview. So the first statement is the income statement. How would you define an income statement?
Income statement, simply understanding, is how much profit or loss the entity makes.
Okay, brilliant. So income statement, we have profit and we have loss. All right. So the next statement is the balance sheet. What does the balance sheet say?
Right. Balance sheet tells you how much assets this entity has and how much liabilities this entity has.
How much assets and how much liabilities, and that will eventually lead to the net worth of a company.
Right.
Correct. Right. And then also within this balance sheet, there's a statement of owner's equity. And would you mind just explaining that?
Sure. Owner's equity is like the bottom line, how much you own, how much your net worth is in this entity. In a simple formula, equity is assets minus liabilities. Just like your bank account. If your bank account has $100,000 and you owe another bank or another person $20,000, what's your net worth?
80.
Right. That's your balance sheet.
I know that. All right. So an equity is how much money is actually in the business.
Right.
All right. And then we have the last statement, which is statement of cash flows. What's that?
Statement of cash flows tells you where the cash comes from. Right. The cash basically can come from three categories. One is your operation. The second one is your investment. The third one is finance.
Okay.
Right.
And we are going to go through all three of those things. All right. And so the first question is, right, so we're going to go through each stage, right? So for the solopreneur, they're looking to go to the next level. You're an accountant looking at them. What's the most important statement that you think a solopreneur needs to work on to get to the next level?
Solopreneur, by the nature, you do not, or most of them do not produce a balance sheet. They emphasize on P&L, so profit and loss.
Income statement, okay.
Right. And then the reason is because most of them, they are on a cash basis. How much profit, how much revenue they make, how much money they spend, the net is their profit.
Okay, brilliant. And then is it okay? All right, for a solopreneur, having a loss in the business, some companies they have losses for a few years and whatnot. Is there a number or method? What do you think about having a loss in a business, and how can someone have a loss in a business and not be discouraged? You know, because sometimes that does happen. I don't know. What is your take on having a loss in a business and still being encouraged to move on?
Don't get me wrong. Every single entity needs P&L, balance sheet, and the cash flow. So sometimes you are not just seeing currently, does this entity make money or not? You want to see their potential. Let's see, if this company, like a fintech company, they spend a lot of money to develop a new technology. Of course, at the beginning, it's always expense, right? But once this technology comes to life, they have a lot of potential.
Okay, so income statement, profit loss, it only judges the past and what's been done, and it determines how much cash is in the business, but it doesn't determine what the business can potentially make.
Right.
Gotcha. All right. So what about the startup now? They're bustling, 5-10 people in the office. What should they be focused? Which one of those statements should they be focused on?
The startups, I think it's their cash flow.
Okay. And why is that?
Because they need to know where they got their cash, where they spend their cash. And then what they are going to do next year. Should they emphasize on more cash generated from operating activities, or they should just looking for more financing money?
And I think this is going to be a future question.
Sure.
So, yes, this is going to be a future. We're going to come back to that.
Sure.
All right, where the cash is going and where the cash is coming from. At the startup phase, cash usually, it might not be coming from the product because it might not be existing at that point. So, but we're going to come back to that. So for the small, medium-sized business, again, they might have operated for a few years now, a few employees, maybe even different locations. Which statements should they be focused on?
The startup and the small business?
The small business. Maybe have a few locations, maybe 50 employees.
Sure.
Maybe even a few years in.
Sure. Let me go back to these startups.
Okay.
Right. Every single business goes through this stage.
Yep.
Startups. But when you want to start a business, the first thing and the most important thing, you need to understand which type of entity you want to go for.
Okay.
The legal structure. Of course, it depends on a lot of different factors, whether you have foreign investors or not, or how many partners do you have, and what is your goal, and how many products do you have. The legal structure is essential for the future development of this company.
So from my understanding, and I actually took a long time to set up, I have an LLC, right? It took me a long time to do that, actually. Not because I was playing around. It was because I really wanted to understand my options. I wanted to understand where I was going to grow. And we had a conversation off camera. And we said that once you set up your structure and you add more layers to it, it can be problematic if you set up the wrong structure. So that's something that if you want to question yourself and say, okay, am I setting the right structure or whatnot? Then get in contact with Aiko because she'll help you out with that. Making sure you set the right structure in your business so you don't have to deal with Uncle Sam. All right. All right. So that's important. So first, finalizing or determining the structure of your business, and then cash flow. Where's the money coming? Where are we putting this money into?
Right.
All right. So now you have the small, medium-sized business. Again, they might have been a little bit more mature now. They have a product now, and they're operating for a few years. What do you think the area of focus that they should be focusing on? Which statement should they be focusing on?
Again, I think it's cash flow.
Cash flow? Okay. All right. And then we're just going to skip over to the multinational. Now they're in Bangkok, they're in Mumbai, they're everywhere. What should they be looking at?
All of them.
All of them.
Yeah. When they are that big, every single statement serves its purpose.
All right. Before we go into that, I want to take a second to say, if you are having an accounting issue right now, and or maybe you might not even know you're having an accounting issue right now. You might be paying your people on payroll regularly, but you might be missing some obligations or requirements in your business. If you think you're having some sort of question, then do contact Aiko. She's a real professional, and I tell you that because I don't prep anybody with my interviews. And this is my way of gauging who's professionals and not. Aiko is the real deal here. So before we even get to the next section, if something is out of your head or you have a quick question, pick up the phone. I'm going to leave the link below, leave the link to their website and everything, and give her a contact. So that's a little commercial. Back into the interview. All right. So here's the next question. So the reason I want to talk about borrowed money is because actually, as of last year, I've only borrowed about the only thing I purchased on credit was my computer, right? Otherwise, I'm cash everything. Of course, I have a credit card for my Amazon bills, but for the business, I don't have a lot of credit, and I don't take out any loans. So I'm very proud of that.
I'm proud of you as well.
So I'm very conservative. But with that, there is this I had this solopreneur phase. Everybody had this solopreneur phase of knocking on the doors and really just hustling, And I didn't have a lot of cash. Versus now, I don't have an excess of cash, but I have a savings. All of my money is in my equipment now. I don't have to restock my equipment, so I'm a little bit more comfortable. So, what's your take on each of these levels? Let's start at the solopreneur. Should they have a lot of cash, or should a solopreneur have a lot of cash, or
control their cash, watch their cash closely,
or not? So basically, should they have a lot of cash in their business, or should they not have a lot of cash in their business? Should they be cashing out? I don't know. I'm not sure, but if you understand that question.
Sure. As a businessman, your relationship with money is very important. You can't be too close to the money. If you are too close to the money, which means you are not going to invest enough in your business.
What do you mean by too close to the money?
Which means you do not want to spend the money.
Oh, okay.
You're very close. Money is my best friend. I want to keep the money in your pocket, right? Under this kind of circumstances, you are not going to invest. Investment includes a lot. It's not just you buy the computer. Investment also includes, marketing, networking. If you do not want to spend $50 go out to market, it's kind of like will be hard for you to grow your business, right? But you cannot have a kind of like too far relationship with the money. Right. In that way, you're going to waste the money. So your relationship with money is very important. So you need to be able to invest, but not waste.
So this is very interesting. In the very beginning of my career, I never really had any cash. Even up until this year. First, I didn't have any cash. I just wasn't making it, right? But then I started making cash. It was going back to the business, right? So let's go to all 4 stages, right? When is it good to keep cash versus when is it good to utilize the cash? How about
reinvestment?
How about we go into each stage? So for the solopreneur, do you feel it's better to keep the cash or put it back to the business?
In the middle. You cannot take all the money out. You need to put some money to invest, to grow the business. Otherwise, you will be solopreneur. You will never ever become a startup.
Oh, that's really interesting. Okay. So what about the startup? Actually, no. What percentage do you think needs to be going into the business versus what percentage should you save? Is there like a lucky?
I think this depends on different personality. Somebody feels safe to have more cash sitting in their bank account. But personally, I think using 50% profit to do reinvestment is a proper percentage.
Okay. And this is maybe after assuming bills and whatnot.
Right. It's out of your net income.
Okay. All right. That's actually a really good point. I'll take that into consideration. So what about startup now? Again, you have a team, few people. Should you want to, keep some of the cash or utilize it?
When you have a startup, you actually have more burden on your shoulder, right? Because you are carrying your employees on your shoulder. If you go bankrupt, what happens to them?
Oh, they lose their job.
Right. You have to think about the people they are with you. You want them to be loyal to you. You do not want to have a high employee turnover rate. So I would say you want to invest more in human capital. Keep them with you, and then you move on, invest in your business. If your employees are not happy, what can they produce? In my early career, that's what I learned. Right, I'm an accountant. The accounting firm bills me out per hour. If they treat me better, and I sit there using my free time to do another tax returns for them. Of course, I do not get paid extra money. However, the company will make extra money. So that is the positive result if you get your employees happy. They will produce much more for you.
Okay. So would this fall in the line of utilizing more cash or is for
utilizing more cash?
Okay. So what about the small to medium-sized business? Again, a few years in, you have maybe a few different locations within national, maybe 50, 100 employees. Should they be utilizing the cash or kind of?
At that time, I feel they should be a little bit more conservative because they have more employees on their shoulder.
Okay. And then the multinational?
Multinational depends on how big they are. Multinational tends to waste money.
Waste?
they tend to spend a lot of money because the source of revenue, the source of cash flow opens up a lot of doors. And when you step out of your country, go to another country.
It's very expensive.
Right. You pay the money to learn a lesson.
Oh, yeah, okay. So But what would you recommend? Obviously, the nature of multinationals is spending a lot of money. So how would you navigate that then? Now you're speaking to a multinational. How would you navigate your cash flow?
I will analyze it with the cash flow by region, right? How much cash I invested in this market and how much cash I spend in this market. Does this market really make sense to me? While I don't know the language, I don't know the culture, I don't know whether they drink coffee or not.
All right. And then you mentioned employees. This actually leads beautifully into my next question. I've done some research and I found some really different perspectives on this about employees and where they fit on a balance sheet. So I'm going to ask you, where do employees fit on a balance sheet?
Employees are off balance sheet items because balance sheet, financial statements always reflect the historical financial data, numbers. If there's no money involved, you do not see it on a financial statement. But employees, human capital, off balance sheet. That's why financial statements can't really give you the full picture about this company. They are off balance sheet items you need to consider.
Okay, now I've heard a few people say employees are assets. Some people say they are liabilities. Some people say it's both. You say it's human capital. They're not in there. That's for you to debate, but we're not going to get into that. So reason why I ask about employees, because at different levels of the business, you will rely more on employees or maybe even systems, right?
Right.
So I want to know at which level should you be more reliant on your, again, human capital, and what should you be more reliant on your actual assets? Now, these assets can be machines. These assets can be software. These assets can be pretty much anything that can probably kind of take a human, replace a human. So I want to know at which level of the business should you be more focused on human capital or maybe just on your assets, right? So let's just, you're a solopreneur. Would you be more focused on your assets or would you be more focused on human capital?
I will, as a solopreneur, I will tend to do more things on my own because of simply cash flow. Yes. I want to spend less. I want to watch out my expenditures, right? However, when you started your business and you want to consider whether your employee is happy or not, at that time, this high technology might reduce the human labor. So it's a high technology versus employee. Which one is going to take more money? Which one is going to cost you more? I believe human labor will cost you more, right? And specifically in the service industry, if human labor makes one mistake or he or she is not willing to produce a high quality work, you're dead because you cannot meet client expectations. Potentially you will lose a whole bunch of clients there. So depends on the software, the high software will make your work much more efficient. And you also do not want your employees go out to tell your clients, to tell your colleagues that, hey, my boss is so caveman, or she does not like to use any software. Everything is in paper. Everything is in human. Please don't go there, right? You want your employees to tell people that, hey, my boss is so advanced. She adapts all possible high technology to reduce my workload, makes my life so easy. And by doing that, I can maintain a work-life balance. I can go home early and I can work from everywhere. I don't have to show up at the office all day long.
So from the very beginning, you want to invest in your assets. Even I'm looking at this, as I'm doing this interview, I'm kind of looking at myself as well. Like these camera equipment, they're actually replacing a human right now.
Right.
I actually was going to hire somebody else to do a project, and I said, "Hey, listen, I need 2 ink." A little technical, right? But we're gonna bring this back. I said, "I need a shot for a client." I said, "They're doing a speech. I need 2 angles, right? Just 2 cameras." They said, "Oh, we have to hire a different videographer. That means we need to charge you more. I said, bullshit. So you just get a new camera, right? So, right. So I have 3 cameras that technically should be 3 people, right? So I totally agree when you're saying that you should be focusing on, the assets, focusing on maybe software. So I can understand that because it's saving me a lot of money.
Right.
Also
tools.
Yeah.
The necessary tools in order for you to produce high quality work.
Exactly. And like I said, I don't have someone behind the camera watching it. It's me, but this allows me to do things more frequently because I don't have to, pay somebody or deal with their deficiencies or whatnot. So what about you're becoming a startup now? Is it the same mindset? Assets over employee? Was that capital? Employee?
Yeah, it's the human capital.
Human capital.
Human capital, I guess, is like a fancy term for employees, right? Right now, I put the clients in advance. Let's say some of my clients, they are high net worth individuals. They know what kind of softwares are the most sophisticated tax softwares. The final product, when they see that, hey, if today I go out, I use TurboTax, the picture I give to my clients is, she's using cheap products. Is that reliable in terms of my sophisticated returns, right? So I want to make a client to know that I invest, I'm properly equipped in terms of technology to serve their needs. This is just right now, my goal. And then secondly, let's go back to a moment ago's question, right? About this, how to meet a client deadline. I do use third-party services as well. When I clearly know that, hey, as a person myself, I cannot think about the whole picture of this business. I need a second pair of eyes. Yes, I have to cut a check to pay the third party. But meanwhile, I build up my brand name. I serve the clients properly, right? And the clients will be happy to know that this is just not my work. Actually, it's another 40-year experienced accountant put together the project for them.
So this may not be the most exciting thing to say or middle camera, but would you make the assumption or statement that at any level of business, solopreneur, startup, small business, multinational, you want to rely more so on systems and assets than people? Is that a
No.
Okay.
They are both important.
Okay.
Software, you produce tax returns. However, who is managing the software?
Okay.
Human.
Okay.
Brilliant. And who is putting those numbers into that?
The system?
Who is the final reviewer to make sure that the system or the software produces properly? It's still human. You need somebody to have a proper experience. Am I right? Your relationship with money determines how far you can go with your business.
I like that because I didn't even... Yeah.
You didn't think about that, but the theory behind that is that, right? Your behavior. You think about it. When you were doing this, was that right? That's why when you ask me how much does it cost to, I never care. I share with my cost with anybody. I deal with numbers, and then I'm always open to that because we're out here. We share our experience. We will grow together. If my business goes up, yours is down to the toilet. You're not going to sit with me together anymore, right? You're not going to become my friend.
Why not?
You're not going to reach out to
Why
me.
not?
No, because you are going to feel bad. If your business is down to the toilet and my business goes up to multinational, you think that you will still come here to see me? No, you feel bad.
No, I think the opposite.
No, I don't think so.
I'll tell you why. Because I started this series when I had nothing.
Really?
Yeah.
Yeah. Oh, that's because you started, not just 10 years from now. If 10 years from now, I own 10 million assets, and then you are done to the toilet, you still want to come to see me?
I'd want to do it even more because I'm like, oh, you owe 10 million?
You're going to say that? No, I don't want to go and see her. I don't want to hear
maybe
about
you
that.
might not want to see me because like, who's this guy? But
I feel like you want to grow together. That's why I always share.
I always want to feel uncomfortable, a little bit uncomfortable. So whenever I sat with somebody, he was just telling me about how much money he made. I'm like, damn, I didn't make that. But like being in that presence, it made me feel a little bit more comfortable. So I like that. I like when someone makes substantially a lot more money than me, and then I'm sitting across and I'm like, okay, I want to strive for that.
Yeah, if 10 years from now, you are still like not far away from there, you feel bad for yourself.
I mean, of course I feel bad for myself. That would
but so I don't want to reach out to the person like, hey, if 10 years from now, you are so successful, you travel all over the world, you never consider, you own a yacht, you own everything, and then I am still sitting here on my own, I don't want to talk to you. I feel bad for myself. I would feel like, how come he's so successful and we're not on the same level? Because you eat different food. You eat steaks every day, and I am drinking daily coffee every day. I feel bad.
But who feels bad? The person who succeeded or the person who didn't?
The person who didn't succeed.
I'm trying to think. Okay, maybe I'm trying to think of someone close to me. Here's the thing. I'm probably one of the most successful people in my circle, so I don't know.
That's why you don't know.
I don't really know. I'm definitely probably the most successful people in my... I'm arrogant. This guy is so annoyed. He's gonna complain. But yeah, you're right. I don't really have anybody that's my age and it's doing what I'm doing. So maybe.
Yeah, it's like I do not mind to share my costs. For me, it's an investment. But when the investment is not successful, be realistic out of there, right? You can invest this amount of money or energy in somewhere else, get a higher rate of return. It's not, for me, it's just learning by doing. It's not being negative, being realistic.
But back to your point about your relationship with money determines your business. That's so true because this year I was more conservative. I didn't grow.
Right.
And even like I built my whole business around having just 2 or 3 clients.
Yeah.
And just being safe.
Right. And it's just sometimes you need to take some risk, which means you have to invest.
But I think personally, this is the time to kind of step back. This is why. This wasn't really the year to explode and worry about more clients. At one point, I was managing a lot of clients. I was like, it kind of got too much for me. Let me just take a step back. But you are right. Relationship with money determines all that stuff. So this is really spot on. Anyway, so let's. You were saying that human capital is necessary for all levels of the business because it's the person behind the software. It's the person behind the machinery that's determining the success of the quality. All right. So, okay. All right. This is also a very interesting question. This is what people would want to know. This is what I think. This is where you step in. All right.
Great.
At what stage? I mean, let me go back. I want to know, how do you do your bookkeeping and accounting at each stage? If you are a solopreneur, how do you go about doing your accounting? Do you do it yourself? Do you hire somebody to do it? Do you go on TurboTax? I don't know.
Do my own accounting?
Yeah. So for each stage, whether it's solopreneur or startup, how should you go about your accounting?
I would say like a solopreneur, because you're quite simple, you need this profit and loss, right? When you consider this cash, you should do it on your own.
Okay.
Right? It's quite simple. You don't need a balance sheet. You don't need a cash flow. All you need is your income versus expenses.
Okay.
You just use a simple Excel, classify them, how much income I'm making, how much the expenses I have. And then boom, at the year end, the accountant will manipulate your worksheet and then come up with the tax returns.
Thank you for being honest about that. Because some people would say, you need an accountant, but I'm glad you didn't say that because your first solopreneur, you do it yourself. You understand your business. So now startup phase.
Startups, if you want to attract some investors, you need to use at least some like software, QuickBook. It's cheap, non-expensive. My suggestion right now, you can just do some simple income expenses on your own. And every quarter or once a year, you get an accountant to go through your QuickBook to see anything is like classified wrong. So to control your cost.
I have QuickBooks as well. Someone introduced me to that. I had PayPal before, but now I have QuickBooks. All right, so now small, medium-sized business. This is the question of, do you hire internal accountants? Do you have outside accountants? That's what I want to know as well.
Outside. You should outsource. Because in order for you to get a professional accountant in-house, it costs you more than get an outsourced professional to work on your book. Because you are still small. You do not need an accountant sitting there 24/7 to do your book. Outsource will be much more professional and economic.
But is it kind of the same concept of you have an internal accountant to do the bookkeeping throughout the year and then an outside accountant for the quarterly, or you just...
You should just give the entire book to the outsourced.
Okay, brilliant.
Because you are way more sophisticated than a startup.
So
much more transactions to go through.
All right, so brilliant. So this is an ad that you can't skip in 5 seconds. So if you are in one of these categories of your business and you're thinking about potentially getting an accountant to go over your books, look at, your tax structure, your financial structure, or your business structure, I should say, and to really go into certain different aspects of your business. Like, we didn't even talk about cash flow and how you're paying your employees. We didn't even talk about taxes in different countries and whatnot. And managing different regions, like Aiko has mentioned. If you have a lot of complex structures in your business, then get in contact with Aiko. I'm going to leave her website and her phone number all in the description of this video. So if you have any further questions about any of this, get in contact with Aiko, all right? And so this actually, didn't finish, but this actually leads into multinationals. And do you suggest, again, internal and external accountants or both? Or
multinational, they should have an internal one.
Internal.
And then year end, most of them, they will have audit done. Okay. A third party audit done.
Third party. All right. Brilliant. That's kind of what I expected. So I'm just going to leave that there. So we can go much deeper with this, but I wanted to talk about those 4 things. Again, I wanted to talk about the 4, stages of the business. And then I wanted to talk about your idea of borrowed money versus putting money into the business. Cash in the business, is it better to operate with a lot of cash or not a lot of cash? That dichotomy, that's very interesting. And then employees and how they fit into the, they don't fit into the balance sheet. And when is a great stage to hire out accountants and how you should implement accountants into your business. So I want to talk about those 4 things, but we are done with that topic. And yeah, so thank you for this. A lot of work that went into this, and hopefully you followed along. So a few more questions that I want to ask you before we leave.
Sure.
So we just went through this huge diagram. We wrote down all these levels of stages of the business, different income statements, cash, all these different things. But so for the person watching this, they're like, okay, Amadeus, thank you for the interview. I appreciate all the information, but what's the bottom line with all this? Why would someone need an accountant? Why is this all important?
Right. I think at the end of the day, specifically as a small business owners, you care about how much net cash left in your pocket at the end of the day. So how does Uncle Sam tax you based on your accounting record? So keeping a proper accounting record is essential to maintain your business and to keep Uncle Sam's letters away from your business.
So all this stuff, whether it's the cash that you want to keep in, whether it's the employees that your net worth, your assets, your liabilities, all this stuff, and the proper bookkeeping is going to determine if
Right, it's going to turn into it is going to show up on the tax returns.
Okay.
Which item is deductible, which item is not deductible, or which item you should capitalize can be amortized throughout of the year, or which approach is can save you some taxes or deferred taxes.
And then most importantly, and if this is done improperly, this can incur extra costs as well, right? So if you're wondering why you should be interested in all this, obviously if you're in business right now, you know how important all this stuff is. But when it boils down to it, like Aiko mentioned, you want to keep money in your pocket. So you want to make sure all this stuff is written down, recorded properly, and also communicated in a way that can best fit your needs, all right? So thank you for all that. And again, I'm going to leave all Aiko's information down below. But before I do that, final couple questions I'd like to ask all of my guests to round everything up. We have some new ones though. So biggest misconception that people have about accountants?
I would say people think accounting is boring.
That's so wrong. We're having so much fun here. It's just so fun.
Right. I actually, personally, I had that concept as well. Later on in my career, I find out accounting does help people. So for example, let's see, a few months ago, I got a consulting job, right? Somebody came to me from overseas, a real estate developer purchased a piece of land. And meanwhile, this real estate developer didn't want to take the loan from the bank. So instead, he gathered a whole bunch rich foreigners. He set up a fund, put all the money into the fund, and let the fund loan the money to the real estate company. In return, the real estate company pays higher than the market interest rate to these investors. So the real estate company was asking me, is there any way when the interest get paid out to these investors will be tax-free to these investors? So tax actually has a lot of fun aspects as well. If you know all this code, and then if you know enough how to dig into it, you actually can make the legal structure to make the interest paid to these investors are all tax-free. Right? It's kind of like if let's say this real estate developer pays 10% of interest rate, which is higher than any of your market rate of return, right? If you invest, if you know tax codes enough and you dig in more, you set up a legal structure, the company pays 10% of interest rate, which is way higher than the average investment rate of return, 7%. So you gain all this money as tax-free. It's a pretty good deal for any person who has extra cash sitting there.
And that's because they've hired an expert like you who was able to solve that problem for them and generate money for them. Right. So, all right. So that's a big misconception that people think is boring, but it's very important, especially as you have more complex issues, right? And then, so outside of accounting, right, that the technical part of doing the accounting, the numbers and all that stuff, what's the most important skill set or trait of an accountant outside of the numbers? What's the most important skill set that an accountant must have?
Communication.
You
want your clients to open up to talk to you about their challenges. I got somebody who wanted to immigrate to here. At the beginning, kind of was hiding this, hiding that. And then the end of the day, the guy relaxed and told me his personal wealth, this confidential information. So I told him, actually, green card is not a best choice for him because he didn't understand how U.S. taxes him. So after he heard my analysis, he agreed, and then he left the country. So a lot of times it's not always about how much service fees I can charge from the client. It's what kind of value you can provide to the client, and the long-term relationship, right? If you always think about the short-term relationship, how much I can charge out of this deal, turn around, these clients, they are not stupid. When they find out the real answer, you break your own bridge. So you want to build up the relationship, step in their shoes, give them your honest advice. They appreciate that very much.
All right, so before I get to my final question, right? All right, Aiko, you're about to go back in time.
Right. Okay, that's my name.
Really?
Yeah.
Go back in time? Really?
My middle name.
Okay. Wow. You're about to go back in time. You are on the plane from, was it
China? From China?
Is it Fujian? Wait. You're on a plane from China to America. You're on a plane, you listen to your music or whatever, or maybe you're sitting back and you're closing your eyes. Then, at some point, you see this flash of a person coming in, and you're like, what is this? What is going on? Close your eyes, and you can visually see yourself. You can see yourself now, but you're on a plane 16 years ago. So you have the ability to say something to Aiko, who's on the plane right now, and you only have 30 seconds. And that 30 seconds starts right now. What do you say to young Aiko?
I am standing on this piece of land, this dreamland. I will be successful and I will work hard towards my goal to let people know that I am useful.
That's it? And any advice to her? That's it? That's it. Wow.
Because I did and I'm happy to be who I am today.
Brilliant. Thank you so much. And last question I like to ask all of my guests before I do that, would you mind telling this camera right here where they can find you at, websites, LinkedIn, everything?
Hi, everybody. If you are interested in this video and you want to continue to discuss further about accounting and the taxes, you can find me at the website www.achanCPA.com. And my phone number is 917-957-8707. Looking forward to further discussion with you all.
And one last question. New York in one word.
Amazing.
Amazing. Thank you so much for watching this video and sitting through all this. If you went through all of this, I'm sure you learned a lot. And thank you so much. If you haven't already, you can subscribe to this channel. That'll really help out the channel a lot. Remember, if you have any further questions, you can reach out to Aiko. Thank you so much. Remember, be great. Cheers.
And if you are interested in the next episode, write a request and we will produce the second one.
What? A follow-up? Nah, you got to go directly in the feed for that. Oh, man.
Oh, man. That's a lot of work, right?
I'm looking at it now. I'm like, yeah, that's going to be a lot of work. But it's good.
I know. I don't know how you can do this. A lot of editing. I really appreciate your time to do this. I don't know how you can do this for hundreds